G'day, fools. It's Scott Phillips here from the Motley Fool. I hope you've had a chance to see yesterday's video we did with the whole Motley Fool team on the Square takeover of Afterpay. But we're back today with a special update. Not so much the fact that anything's changed, but we heard from you that you wanted more information on exactly what happens in terms of the details of the takeover. And for that, I'm joined again by Motley Fool analyst extraordinaire, portfolio manager, all-round good guy, Ryan Newman. How are you, buddy?
Good, thank you. That's quite the introduction.
I got to do what I can, mate. I got to do what I can. But bottom line, you're the sort of bloke who makes me look good if I do, and if I don't look good, then it's all my fault. So either way, it pays to be in your good books. Mate, let's go through this Afterpay takeover. So we had some questions. We talked about 0.375 shares for every share you own. And we had some questions on YouTube. Hang on, does that mean my share's worth 37 cents? We kind of managed to confuse a few people on the way through, and that's probably fair enough. We're dealing with a company takeover. We're dealing with them using their own shares as the collateral here. It's a US-based company. There's lots of moving parts here. So what we thought we'd do is just spend 5 minutes or so to really slow it down. If people own Afterpay shares, they will have owned them on Friday. I think the shares were $96 and change, something like that. All of a sudden, this morning or maybe yesterday morning, they're being offered a certain number of Square shares at some US dollar value price. Can you just break it down for us bit by bit?
Yeah, so rest assured to all of those Afterpay shareholders out there, they are not only worth 37 cents. They are worth 37.5% of a Square share. So Afterpay's share price was $96.66 on Friday. Mm-hmm. Now, luckily for Afterpay shareholders, Square has actually offered 0.375 of its own shares per Afterpay share that you own. So for every Afterpay share that you own, you will get 0.375 Square shares. Now, thankfully for Square shareholders, for Afterpay shareholders rather, the Square share price actually rose again following the news this morning by about 12% overnight. Nice. So that's a double whammy for Afterpay shareholders who actually, the shares were actually trading for a slight discount yesterday. I think probably based on a slight expectation that the Square share price would probably decline overnight, but it went up. Yeah. So that was a big win. So the Afterpay share price was trading at $96.66 on Friday. It's now trading for about $129. Now, the mechanics of the deal...
2 days. Yep.
Absolutely, yeah. For 200 shares owned, it's a gain of about $5,000 in 2 or 3 days. So that's a really nice going. So look, based on the mechanics of the deal, so for every 100 shares that you own, you're going to get 37.5 Square shares. Let's just simplify that a bit. We'll work with round numbers. So we'll say 200 shares of Afterpay that you owned, so that 75 Square shares is what you'll be receiving. Now, based on that higher Square share price overnight of $272.38, that was of the 2nd of August, using an exchange rate of about 73.7 US cents per Australian dollar, that actually converts to nearly 370 Australian dollars, as you can see on the screen there. So that's a pretty substantial premium for what Afterpay shareholders are going to be receiving. Actually, it's worth about $27,750, which is, as I said, really nice.
That's pretty good. So it's really, really complex, mate. You start with some Australian shares. You're then swapping 100 of them for 37.5 of the American shares. And that feels like less, but then the American shares are trading for a whole lot more per share. So you kind of got to do the maths, right? You have to convert the number of shares, then the US dollar share price to Australian dollars, and then try and do that whole thing. Bottom line, as we can see on the screen, the numbers basically show that instead of owning 200 Afterpay shares at $97-ish on Friday, you're going to earn, if you hold those shares and at the current share price, and those things obviously will change, but you're going to have 75 Afterpay shares instead of, Square shares, 75 Square shares instead of 200 Afterpay shares. But the total value, because Square is much more expensive per share, you actually go from having, $19,300 to, as you said, $27,700 because of the takeover. You'd be a pretty happy Afterpay shareholder this morning, wouldn't you?
Oh, you absolutely would. And as I said, the Afterpay shares, I think, were trading at a slight discount to what the offer price was yesterday,
right,
based on the expectation that Square would decline in price. But that hasn't happened. So a real win for Afterpay shareholders there, I think. In terms of where to go...
Go on, please. Yeah.
No, sorry, you go.
I think I was going to go where you were going to go. So what I was going to say was, obviously that's now, right? So if you take the cash now, you know what you're getting. You can sell on the market. We're recording this during the day, but depending on where you're watching this, it could be after hours. You can sell the shares for currently what they're trading at. And for all intents and purposes, they should kind of roughly move in tandem now, right? We kind of know that there's this fixed exchange rate, at least in terms of the number of shares, and the exchange rate, the true dollar exchange rate, won't change all that much. So there's now this fixed relationship between Afterpay and Square shares. You can sell that now, but you don't have to, right? You can actually hang on and then get either New York Stock Exchange traded shares, which seems frankly complex and difficult, or Square shares will actually trade on the ASX. And effectively, your brokerage statement eventually will say, well, you had 200 Afterpay shares. You've now got 75 Square CDIs or CHESS depository interest. And we discussed that yesterday. Quick break. If you look up here, you'll see a link to yesterday's video. Do click on that if you're new to this one. If you're coming in here, much more detail on the whole takeover somewhere else. You can sell now, take the cash. You can hang on. Let's just go through some of those rationale, mate. If you're thinking, if people are thinking, well, hang on, what do? I had a question on Twitter from Tommy only an hour or so ago saying, mate, mum doesn't know what to do. What are the options here? What do I have to do? The first is obviously you can sell the shares on market at the current price, take your money and run. You can hold on and become a Square shareholder. Now, why would you want to take that option potentially?
Yeah, so there are a couple of different things to consider here, and neither you nor I are tax accountants, so we're not giving tax advice here. But in terms of when you actually purchased your Afterpay shares, then you may want to hold on for a certain period of time, I guess, to get you across that 12-month threshold to potentially make you eligible for that capital gains tax discount. So that is one reason. Another reason that you may want to hold on for longer is a superior offer may come through. So we don't know that Square will definitely take this one. A better offer might come through. I see that as being unlikely, but still possible. You also might want to still be part of the Afterpay story. Now, assuming that this Square deal does go through, you won't own Afterpay shares directly, but you will have an indirect holding in them via your Square ownership. Now, we did discuss in yesterday's video, which we linked to before, that with Square owning Afterpay, it will no longer be a buy now, pay later pure play. You will actually have access or ownership of a much broader financial services business and digital payments business, which I think does de-risk the position and frankly, I think makes it a more attractive solution in the long run. So in terms of actually holding on, you may be better off, depending on your personal circumstances, holding off from selling and actually owning the Square shares.
Yeah, I like that. In fact, I mean, Square, Trevor was mentioning yesterday, Square is growing. I think he said 91% it was growing year on year. So it's not exactly like you're selling Afterpay and buying Commonwealth Bank that's growing at a couple of percent a year. Square itself is a financial disruptor and growing very, very well. Now, I'm not a Square shareholder. I don't have a strong research background in Square, but Trevor certainly does and likes that company in particular. So as you say, whether you want to keep on the Afterpay train, whether you kind of like the Square story and you're happy to say, well, let's keep going. You mentioned capital gains tax, mate. Of course, the other thing is the company is applying for capital gains tax, what they call rollover relief. Normally, if you sell shares, you've got to pay tax. If you convert your shares from Afterpay into Square, you can hold those for an extended period of time and there's no tax liability. Potentially, the company still has to get that ruling, although it seems like a fait accompli. Again, as you say, we're not tax accountants, so let's not say put that in writing. Maybe in pencil. Just make sure you check. But they are applying for rollover relief, which would mean you can convert your Afterpay shares to Square shares and continue that ride without having to pay a tax bill until you sell those Square shares. So, and as you say, mate, if you sell them after 12 months, you also get a capital gains tax discount. So we're not saying you should keep your Afterpay shares and or turn them into Square shares. We're not saying you shouldn't either. We're just saying those are some of the reasons to think about why you might want to either take some money off the table or hang around for the full ride. Ryan, thank you very much, mate, for spending some time with us. I hope that's helped our viewers understand a little more about the mechanics of this deal. It is super complex, so we've tried to break it down for you as best as we can. We hope that's helpful. As always, if you do want tax advice, speak to your accountant. You'll also get information from the company directly in the fullness of time. So maybe the key thing is you don't need to do anything yet if you don't want to. If you want to sell, take the premium, by all means do that. But if you simply don't know yet or you want more information, it will be coming from the company in due course. So hang around for that. consider that. As you said, get tax advice if it's important, and then decide what you want to do with your Afterpay or Square shares as this disruption continues to really resonate right across the financial services industry. Thanks again, Ryan, for being with me. Thanks, Phils, for watching. Until next time, full on.